Good day to one and all. This is Dr. Sivaraman of iknowanalysis.com. So for the fresh week, 18 to 22nd of August, I'm going to present here the Asian Session Live Market Analysis webinar that is on 18th August between 5 and 5:30 GMT. So we'll try to see what the expected moves are based on the forecast algorithm. And also we'll try to use the market reading technique to fine tune the levels. And also I'll try to give you the derived levels in which the currencies are expected to fluctuate or make swings in this particular week. So we will try to look into that of the expected market moves. Okay. Now we are in the third week of August, that is 18th to 22nd. So we have one more week to go in this particular month. That will be the last week. So the first and the last week, they are expected to make the trend reversal moves. But during the rest of the weeks in between, they make the trending move. So there need not be any ambiguity with regard to that. So that when you have seen the trend that Euro and JPY are making the downward move, they are expected to continue the same move till the start of the next week. So that is what we try to derive based on the previous experience and also of our observations. They do the monthly trend reversal moves, but in between the month, they do the trend reversals very rarely. And that too during seasonal changes, not otherwise. So we will come across the swing and slide moves in the case of Euro and JPY in this week also. And today, 18th of August, swing and firm up move is expected during that of the Japanese session, and then swing and slide during European, and swing and firm up during that of the US session. You know that during that of the trending week, they will try to make the week beginning false move on the upside because they intend to make the drop later on. So they will try to pretend as if the market is going to reverse, induce the traders to take long positions, and later on start making the slide so that they will be able to take the market to the lower level, but somebody should sell. So when they drop, those who have taken the long positions will automatically liquidate the long. And in order to earn back the lost money, they will try to sell there, thinking that the market is going to come down further. And then later on, you find the players buy all those sells at the lower level, start reversing the market. So this is what happens every time. So week beginning false move, they will try to make the opposite to that of the intentions of the intentional move they intend to make during this particular week. So they are expected to form up today, slowly, Euro and JPY, and later on start the slide from tomorrow, the swing and slide during Japanese session and swing and drop during the US session, and they may make a small firm up move. So if you look into that of the expected market move, session-wise expected market move, you can find out what sort of trade you can do. You can do the sell and buy trade in the case of Euro and JPY, and buy and sell trade in the case of USD CHF and USD Yen. And also try to find out whenever they are expected to form up, and then take the sell positions during that particular session. In the next session, you will be able to book profit. And similarly, on Tuesday, you can sell during the European session firm up and book profit during the US session draw. Then they are expected to make the either way moves on the downside as well as the upside on Wednesday. Either way stop and to confuse the traders. And later on Thursday, they are expected to make the drop during the Japanese as well as the US session. Then on Friday, they are expected to make the drop during that of the Japanese session, and then slow slide during European session, and swing and firm up move. Similar to last Friday, they are expected to make a small firm up move. In a bearish market, the Friday closing will be firming up. In a bullish market, the Friday closing will be long liquidation. So that is how, and they call it as a profit booking. So always understand that when the Euro and JPY are expected to come down, That means Friday closing will be slightly firmed up. They will not make a big upward spike or something like that. They will only firm up and induce those who have taken the sell positions to liquidate their, just close their sell positions. And also they see that those who have taken the higher level long also exit out of the positions. And then later on Monday, they do the false move on the upside. So Friday, they close it firmly. And then Monday, they open high and just make a pretension as if they are going to continue the rise. And later on, start making the slide. So in a bearish market, you'll find that Friday closing will be a firming up. And it's also true with regard to stock markets. Then also during the week beginning, they will make the false move. So this, you keep it in mind, and what session they are going to do it, that has been derived using the focused algorithm. So we can make use of it. And if it is working for you, then every week you can take a screenshot of the focus page, and then later on you refer it each session, how exactly they are making the moves, and take your trading decisions so that there won't be any ambiguity, because whenever you find the market is just making slow moves, then you like to know whether it is going to go up or come down. At every level, at every stage, you get that ambiguity. So in order to avoid this expected market moves are given, so that you'll know, okay, they're going to firm up, then take a buy and book profit on that. Or otherwise, wait for the firm up and take a sell, so the next drop you'll be able to book profit. That way you can just plan your trades. And this is mainly to facilitate your trade given the expected market moves for the week. Then last week, that is the next week will be the last week of the month, 18 to 22nd, and they're expected to make the month-end volatile moves during that particular time. And again, they are expected to make mostly the USD gaining moves during that time. And also during first week of September, they are expected to make the USD gaining move and then start reversing that market. Hopefully this time, they are expected to reverse the market after that of the new month start. So let us see how exactly they are going to do that. And now, with regard to the levels in which the currencies are expected to trade during this particular week, so euro is expected to trade from 1.34 to 1.32, and suddenly they could make a drop and look for that and then try to take a buy positions. Don't be in a hurry. At around 1.34, they will induce the traders and give the impression that 1.34 is a strong support, and probably any downward move is a buy opportunity. Then the traders, when they start taking the buy, they will take it to 1.32 briefly, and then all will liquidate out of fear. And then the technical analyst will say that it can go to 1.28. Then automatically the people will liquidate, and then they will reverse the market. So keep that in mind, that when they are consolidating in 1.33 to 1.34 level, they are only just buying time and building the positions, and quickly they will make an extended downward stop and then later on rise. So in the case of GBP, as we have seen that previous week, they just made the extended upward stop and to that of 1.6840 level, and from there they breached 1.67. Whole of last week, they have been holding around that of below that of 1.67 level, and then now they have just come above that of 1.67 and 1.6730. They just formed the high, and then 1.6733, they have formed the new high for today, and they are expected to come down again after the week beginning false move on the upside. So whenever they make an upside move of this nature, once they stop cutting the new high in a session during the early or the late session, because they are the time they handle the majors. So at that time, take a sell position, we'll be able to comfortably book profit. Then in the case of USD yen, 102.25 is the low, 104.50 they are expected to rise to. So far they gained up to 102.45. Then CHF 90.25 could be the low, 92.50 could be the high. and they are expected to slowly gain the levels. And Canadian dollar, they just gained from 1.06 to 1.0986 and then subsequently made the downward move, giving the impression that it could make a reversal move, but they are just holding it here, inducing the long holders to liquidate before making the upward move. And you know that Canadian dollar, yen, etc., they will make one-sided moves. So we need to be very careful, and we cannot expect, similar to euro and GBP, that either way moves in these currencies. And they are just inducing the traders to take sell positions, and later on they are expected to gain the level. In the case of Australian dollar, 93.09 is the low, 93.24 is the high, and they just cut the high by 1 pip. So 93.25 could be the high, and 91.50 they could come down to. Later on, we'll come across that there will be a disconnect between euro, GBP, as well as Australian dollar. When Australian dollar is making a downward move, euro and GBP could make upward move. That sort of moves they are expected to make it. At the moment, they are holding Australian dollar, making the downward moves in the case of euro and GBP. But later on, when euro and GBP are rising, they will not rise Australian dollar in tandem. So watch that and trade accordingly. Now coming to that of the market trading technique. So as we do it every time, that we note down the initial lows and the highs around 3:30 GMT on a daily basis and try to find it from time to time, whether they just breached such levels. So high is 1.3399 and they are not breached it. The low is 1.3388, that is also not breached. And in the case of GBP, 67.14 is the low and 67.30 is the initial high, but they went up to 33 and come down. So they made a brief upward stop of 3 pips and they are expected to come down in the case of GBP. And in the case of yen, 102.25 is the low, 102.45 is the high. They are not breached the low or the high, they are holding in the middle level. CHF 90.24 is the low, 90.38 is the high, they are not breached the low or the high. Market is in the middle level. And in the case of Canadian dollar, 1.0881 was the initial low. They came down from there to 1.0878. So about 3 pips, they just made a downward move, but they are still holding there. So probably mid-session, they wanted to handle the crosses by making such contrarian move. Euro negative net change, GBP positive net change, USD yen negative net change, Euro negative net change. Then you find that Australian dollar and the Canadian dollar are showing the USD weakening move. So they are trying to make the contrarian move in order to handle the process. And later on, they will come to that of the majors. So they are handling the commodity crosses. And that's why in the case of Canadian dollar, they just made the downward move briefly. And in the case of Australian dollar, 93.09 is the low, 93.24 was the initial high. They went up to 93.25 and come below. So a brief upward stop and then start making the slide. So in the case of Canadian dollar, they are making the extended move. Here you find in Australian dollar, they just made the stop and to reverse, whereas in the case of Canadian dollar, they are holding it for 2 hours. And you know that net change is also 20 pips when compared to that of 2 pips of Australian dollar. So here you find that in the case of GBP, they made about 38 pips net positive net change, whereas Euro has made only, Euro has not gained, instead it is making 7 pips negative net change. As a result, you find Euro GBP cross is come down. So Euro GBP cross will be on the downside, 22 pips. So they are handling the crosses to start with, and watch that carefully. And when they are handling the majors, you try to focus on the trades. So always keep in mind that the spread between the high and the low should be more than 40 pips to initiate a trade. Let them spread. Bring the spread. Later on, you commit position so that you will be able to quickly book profit. Otherwise, simply you will be holding the position and it will take a longer time for you to book profit. So this is the market reading and the trading decisions, how we do it. So entry, we take it near that of the high when the high has not been breached for more than 30 minutes. And during the early and the late sessions, so they breached the high in the case of GBP. So wait till late session, and so that when they are not breach the high and they may do a false move up to that of the high and then reverse, then take a sell position. Then we'll be able to quickly book profit during the downside move. That way you can take decisions and also keep 30 pips hedge order to limit the risk. And once the position makes profit, keep stop at entry so that you reduce the risk to null and you eliminate it by keeping stop at entry so that your equity is protected and later on you will be in a position to slowly build up your equity and maximize the profit by using a trailing stop and also take profit order of 45 pips if the momentum is very slow, and if the momentum increases, you can increase it to 75 pips. So essentially, you can keep the take profit order as a trailing order. So you can just move it up and down and then try to maximize the profit or minimize the profit, and also trailing stop on one side to protect the position so that if they reverse suddenly, your position will not incur any loss. So that way we try to do the trading strategy so that consistently we are able to trade and earn money from the market. Now, these are all the market timings followed by that of the players, and also I have given how exactly the early, mid, and the late sessions are defined, and also the gap time in between the sessions. So these are all the definitions of them, not mine. Okay? Then they handle the majors during the early and the late sessions, and the commodity pair, the crosses during that of the mid sessions, and also they handle only two pairs at a given time. So you can easily recognize those two pairs wherein the spread is more. Then they will focus on that currency and try to increase the spread. For example, now they are handling the GBP and Canadian dollar, where the spread is more. They will handle only two pairs at a time. So that means what? There could be a lot of pending orders or pending stops in such currencies, and they will try to make moves quickly and hit the stops and earn money and build positions opposite to that. And that is how they do it. Then the gap time moves, they make the false moves. So you can identify what move they are doing during the gap time. The opposite, they will try to do it in the first 30 minutes of the new session. So you try to follow the market times in GMT using the GMT time scale, and also try to watch what sort of moves they are doing it in the market, so that without any fear, you will be able to really understand and earn money from the market once you follow the market timings. So if there are questions, I'll answer to those questions. Then Gregor has got a question. What is your view about S&P 500 and Dow Jones? So as far as stock market is concerned, in this month and the next month, they are expected to firm up somehow. Later on, only will come across some corrections. Then dear professor, what is the significance of GMT 4 AM? I see usually reversal happen at that time. As far as GMT is concerned, avoid using the AM and the PM. If it is a 12 hours clock, then you can say AM and PM. But GMT is a 24 hours clock. So when you talk in terms of GMT, there is no need to say 4 AM. 4 means it is only during the early part of the GMT time. And if it is a later part, it will be 16 GMT because it is a 24 hours market cycle. When the globe is circulating or revolving, you find that it forms 24 hours and it makes one circle. And so, because see, these are all small mistakes. By that, no, you are not able to really follow what I say. And also sometimes you miss major important events in the market by converting to that local time or just using AM and PM, etc. Hope you will not mistake me. I'm trying to correct it so that no, you are able to sense the market without any emotions attached. What they do is around 3:30 GMT, they try to set the initial high and the low. And it is not the reversal actually. They just come down quickly and form the low, or initially they will be swinging near that of the high, and quickly around 3:30 GMT they will come down to that of the new low, set the initial low, then afterwards start gaining the levels and go out to that of the high and start making the slide or whatever it is. So that way, you will be able to find that around 3:30 GMT, they 2:30 to 3:30 GMT, they are focusing on setting the highs and the low. At that time, if you watch carefully, if they set the low, you can buy and book profit during setting the high. And if they set the high first, then in 1 hour you can book profit when they set the low. You should be able to accept even if the spread is about 10 pips and the profit making is about 7 pips. And so initial lows and the highs, they set it. Later on, when they increase it to 40 pips during the mid and the late session, afterwards, if we commit, then profit booking will be very fast. Because ultimately, you need to understand that anybody for that matter, when you hold the position for a prolonged period, your patience is tested. So avoid such instances so that you don't lose your patience and going for a distress trade at any given time, so that you are able to spend enormous time with your family and also with other activities and focus only when the market is very active. So look into the live market code page, but don't commit any positions. See that they are increasing the spread to more than 40 pips. See which currency they are handling during different time frame. Then commit positions in those currencies. You'll be able to quickly book profit. Don't have any sentimental attachment. Don't have a sentiment that I should not do sell and buy trade in euro because I like euro. There is nothing of that nature because they're all nothing but the ratios, and you can do sell and buy as well as buy and sell trades. The physical currency is different from that of these ratios. So you may have a sentimental attachment or a patriotic relationship with regard to the currencies, but here they are all traded in ratios, and these ratios are traded in leverage conditions. And the actual currency market conversions not happening in these levels. And if you approach the bank and if you want to convert US dollar to euro or euro to US dollar, they will give a different rate. And if you are a very close customer or a very reputed customer for the bank, they may give about 10 to 15 pips away from the market. And if you are just a casual customer or not making frequent trade, they may give that call 200 pips away from the market. So keep in mind that these are all tradable ratios, nothing more than that. And because many of the analysts, for convenience purpose, they use the nicknames for these currencies, something like calling a dog or something like that. And so automatically you develop the emotions attached to them. And that is not good when you are doing it, when you are taking trading decisions, especially. because trading decisions, you should be able to uh, do it without objectively, without any bias, without any sentiment attached. And that is the biggest problem, because when they quickly gain, you become emotionally bullish and you don't feel like doing a sell and buy trade. So that is why I insist upon just control the emotions and don't call these currency pairs with any nickname. We just call it as Euro USD, USD Yen, GBP USD, and things like that, so that you are not really feel that they are tradable at any given time. How can we trade local currencies? Local currencies are moved in tandem with that of the international currencies, and in the sequential trend reversals, you'll find the local currencies will move first, and later on you will come across the commodity crosses. If you see most of the local currencies, they will be making the USD gaining move. Then Professor Siva, in this case, GBP made more than 40 pips or more. We could short this pair. Yes, we can short this pair because GBP, actually it is gained 41 pips net change, but the spread between that of the initial high and the low is not 40 pips, or the current high and the low is not 40 pips. It is just 20 pips or 19 pips. So it's better to wait for them to make 40 pips spread between the high and the low. Hope you are able to understand it properly, not the net change. Net change is actually from that of the previous day. On Friday, GBP closed 40 pips below the current level. That is what it refers to. So we could short this pair or we should long. I recommend you to do sell and buy trade when they are closer to the other high, or make a brief upward stop and you try to take sell position. In the case of GBP, use the hedging order to limit the risk. In FX, please, doctor, can you talk a little bit about your routine? How many hours do you sleep? Why suddenly this question? I'm not able to understand. See, I do take normal rest. I'm active from that of my local time around 5:36 up to 12 midnight. And because clients from various countries contact me and I answer, and in between, I also take some rest, and I don't put enormous stress on myself. I casually watch the market, and I am now accustomed to watch the market very casually. I don't become perturbed, even during the data release and things like that. So ultimately, I want everybody to develop the concept or the feel trade at ease, so that nobody can defeat you. Once you become emotionally all right, no player can handle against you, the market, because you are able to easily perceive it and nothing becomes a surprise for you. Then Chowkiat. How about Aussie? Aussie is also expected to come down, and you now watch. See, you are able to understand that Aussie is holding around 0.93 for a prolonged period. It went up to 0.95 as an extended stop, and then subsequently trading between 93 to 94 level. At that time, Euro and GBP were making about 200 to 300 pips drop. But Aussie was holding it. Why? Because they wanted to gain the levels. See, when Euro drops and Aussie is holding the levels, automatically Euro Aussie comes down. So that is how they handle the crosses of Aussie that way, because the denominator, when the Aussie becomes denominator and it is strong and the numerator is weak, then automatically the pair comes down, the crosses. And later on, what they are expected to do is, when Euro and GBP reverse and gain up, at that time they will drop Aussie. then you will be able to really understand how cleverly they are handling two pairs at a given time. You come across so many pairs, that four majors and two commodity pairs. Besides, you come across so many crosses. And all these crosses are related to that of those majors. So simply handling the majors, they are able to bring in the fluctuations in the crosses. The crosses, the volume is very less. That is why you come across big spreads happening there. So when you wanted to commit positions in the case of crosses, that spread should be more than 70 pips and between the high and the low. Only then, if you commit the positions, you'll be able to quickly see profit. Otherwise, you may not come across quickly. Many of the traders think that, okay, if they trade in crosses, they'll be able to earn and become millionaires quicker than instead of trading in the majors. But later on, they realized that they quickly lost all their money just because they had traded in crosses. See, if you want to trade in crosses, you need to have a perfect understanding of the majors, how they are making it. See, now, in the case of euro, they just made a negative net change, and in the case of yen, they are showing negative net change. So euro is making the USD gaining move, whereas USD yen is making the USD weakening move. Because of that, euro yen is making about 10 pips negative net change. So we have to find out what they intend to do. So when they show like this, that means they wanted to push it down. So at that time, don't go and buy. Let them increase that. And afterwards, stop cutting the new low. Stop cutting the new low in euro. Stop cutting the new low in yen. Stop cutting the new low in the case of euro yen for 30 minutes during the mid session, because they handle the process during mid session. Then you try to take a buy position, you'll be able to see the profit. Otherwise, when they are making 200, 300 pips drop, simply you buy, and later on, if they drop 100, 200 pips, and immediately you liquidate. Many of the traders I have noticed that they simply commit thinking that it is a good support, and later on they liquidate the long position and turn short. And sometimes they book profit, sometimes they vulnerably get trapped, and later on they rise the market. So don't do such emotional trades. And you are not here to fight against the market. You are here to make money. Ines got a question. May you please explain how we can handle volatile situations like last Friday? See, last Friday, they just made a small dip, small rise, etc. And always keep in mind that you have to use the hedge order. And once the position makes profit, keep stop at entry. In case if you wanted to maximize the profit with regard to the sell position, keep stop at entry. In case if the hedge order is filled so that you lose your position, you don't lose money. Only the position is closed. In such a situation, you watch for them to set the new high during the next day and then try to take the sell positions so that you don't lose money and you get a nice opportunity to take a sell position at the higher level. So during volatile time, use the hedge order and don't think that you're taking such a great effort in taking the position, and if they simply close the position, you feel very bad. There is nothing to feel bad because you entered in a position at the same level you are closing it. And that means what? You have got a better level to enter at the market. When the market is giving a better, higher level to enter sell position, why you want to simply hold the position and don't become possessive of such positions? This possessiveness only make you to incur more loss. Even in the last making position, you try to hold it and try to see that one day or the other, the profit will be seen without understanding how they are going to make the moves in the market. In the case of Euro and GBP, they will make the volatile moves. They can go up and come down. If you hold it for a week, you will be able to see profit. Whereas in the case of crosses, if you hold the positions, probably you may have to wait for 1 or 2 months in order to see profit there. So understand the behavior of the currencies, especially the denominator currencies. They make one-sided move for a prolonged period. That also you need to understand. And that is why I always tell the small traders to focus only on euro and GBP so that they will make volatile moves. And you wanted to trade without a stop and take very less positions without a stop also if you trade, then 1 or 2 days we'll be able to see profit. Keep stop at entry immediately and then book profit by using a trailing stop and a trailing limit order. That way, slowly you can build your equity and understand losing the money is not greatness. And don't think that, okay, I can afford to lose. I'm a rich man, so I can afford to lose. That means you are trying to glorify your foolishness, that you do not know how to trade and you are losing the money in the market. Instead, you simply substantiate your act by telling that I can afford to lose. That is not the right way, because you have to, it is something like I buy a car and I do not learn the driving properly and go and hit everywhere and simply say that I don't care. No, if it is hit, then I don't mind paying the compensation for that. It is something like that. Then Aditya, do you think that Indian rupee will strengthen in the near term? Uh, yeah, because see, this time they are going to weaken Indian rupee by month end, and afterwards next month you will come across it will strengthen. Then Biplab, can I see the weekly focus? Yeah, I'll show the slide. Then FX. Local currencies lead the rally and also lag behind before. Yes, that's what I told you. Before handling the commodity crosses, they handle the local currencies, the regional currencies. Then Addy, I miss your info on USD yen. What is the direction of USD yen? USD yen is expected to weaken. So, USD yen is expected to go up. So that means yen is going to weaken and you'll come across a US dollar strengthening move. So from that 102.25, it will go to 104.25 level. Could you please flash the weekly movement again? Yeah, I will show the slides. So here you go. This is the expected market moves for this week, 18th to 22nd of August. Then you can take a screenshot. Otherwise, this webinar is being recorded and you can listen to the recorded webinar and get it also. Since these are all the levels, see, FX Trade is taking all the efforts to record it for you people to make use of it later on. And see, if you want to earn really, you have to be brisk and you should not become lazy and you should not expect somebody to come and do a spoon feeding for you. You have to explore and you have to develop your skill set and you have to become smart. You know? And those things are inevitable. These are all the initial lows and the highs. Okay. So I take this opportunity to thank FX Trade for the facilities provided, and also you people will come here to listen to my webinar. And there is a question, I suppose. And Nick has got a question. How about GBP, up or down? GBP is expected to make further downward move. I told you that it can come down to 1.66 level. Okay, then. So I'll come back on 21st, that is coming Thursday, and try to review whether the forecast market has moved in tandem with that of the forecast or against. And we will try to also do the market reading on Thursday and Friday to find how exactly they could make the moves for the weekend. So I wish you all happy trading. Try to see that you are not entangled with the emotions or emotional approach during data release, etc. And don't develop uncertainties also. keep in mind that they will make a false move before that of the intentional move in the market. So if they make a small form of move before the data release, that means they want to drop after the data release. So try to read that false move before the and after the data release, so that only the data release gives the uncertainty for most of the traders. So if you understand how they are making a false move, and irrespective of the data, they make the opposite move after the data release. That means the data release time, they use it as a trigger time. Then you will not have any ambiguity with regard to the market. Once you get the clarity and also understand that it is a man-made market, so they are bound to make such moves in order to earn from traders. Let them earn from any trader, but not from me. That sort of commitment you should have and understanding you should have. Then you will not lose money. So wish you all the best in your trades. See you on Thursday.